I'm here with Meredith Marshall from BRP Companies. Meredith, thank you so much for being with The Real Deal.
Thanks for having me.
What are you thinking right now in the New York City market? We're obviously talking at a pivotal time. 421A, or the successor to it, is up in the air. How is the city going to, how is development going to work if it doesn't pass?
I think it has to pass at some point because you can't build rental housing without tax abatement. And New York is a great place because we had, as of right, tax abatements. You don't have to negotiate on a discretionary basis every time you want to do a development, and we can't operate that way because we can't scale, and New York is a very big market of nearly 9 million people. So I think the electeds will come together and pass some form of a as of right tax abatement, whatever you want to call it, 485, 685, whatever. It has to be done, and we need predictability. And I think it may be bureaucratic or municipal malpractice not to do so, because a lot of development in workforce housing takes place because and owing to tax abatements.
And what is your message? You're with us here. What is your message to the audience, primarily developers, brokers, and all that? What's the takeaway they should have?
The takeaway is we will get a deal done.
Yeah.
And to hold tight, but I'm still buying property and land because I feel that New York would always come through, and I'm bullish on the city.
There's been obviously a big leftward shift in our politics, in the city politics, state politics over the last few years. That has probably made things a little bit more difficult for someone like you.
I built a lot of affordable housing, so a lot of the leftward tilt, I kind of know these folks, and there's some trust there. And I think we need some understanding. A lot of affordable housing has built-in tax abatements. So a lot of the affordable housing groups, we're covered. We don't really, that's not our fight, but it is because we need to build more housing. It's an effective tool. And I think we have to sit around the table to ease some angst because people think there's a giveaway when really it's a net benefit.
There's a communication issue as well, right? It feels like the complexity of development and how expensive it is doesn't necessarily translate.
There are two sides of a balance sheet, right? So what is the cost? The cost, they say, I'm hearing, I don't know, that's what I'm hearing, $1.77 billion is what you read in the press, right? But what is the benefit for the asset side? The other side of the balance sheet is 5,000 units are built. So I know units of 500,000 a unit to build, our units at least, that's $2.5 billion a year. That's a benefit to me, right? And otherwise, those units won't be built. And so you're not foregoing 177. Without a tax abatement, you won't build multifamily housing at all in the city.
Maybe we should end with something positive. What are you most jazzed about in developing in New York today?
I'm jazzed about people coming back to the city. The city is vibrant, you can tell. It's a little different. Office will be a little different, Midtown will be a little different, but we're bullish. We have high occupancy in our buildings, and people want safe and high quality buildings to live in, and New York is coming back.
New York is coming back. Meredith Marshall, thank you so much.